And recording. I don't know if you heard the British lady, but
There she is. We got it. We're
we are
alive.
live.
We're live. We're speaking, and we might even be able to upload this.
We're still in the same building too. That's the sad part.
Yeah, I know. Coming live from your dining room.
Yeah. Well, you said you heard a stupid conversation today, so would love to hear
Yes.
more about that.
Okay, so whenever you're in public, uh, and someone begins speaking about the things that you do, it's the greatest ever. Like you legit get to be a fly on the wall listening to the consumer. That happened to
Yeah.
me today. So I'm on the treadmill, and the two people next to me know each other. They're on treadmills and they're talking, and I had my music on, but I heard him say, "What are they today?" So I was like, "No way, is he talking about interest rates?" So I leave my headphones in, but I turn my music off so I can listen to them, and they have no idea I'm eavesdropping.
Classic.
But they just started talking about everything that we talk about and everything that we hear in the market. So they're talking about all the marketing they're receiving, basically. He's like, yeah, what are the rates? So I didn't really quite catch if the lady is a realtor or if she's a lender or something, but I wasn't real sure. But the guy was talking most, and he's like, yeah, keep getting these notices, these things that says I can save like 200 or so a month on my payment, but I'm not real sure. Like, and honestly, and this is the funniest part. He's like, honestly, if you're not gonna save me 500 bucks or more, like, don't talk to me. That's what he said. So I
Yeah,
was,
the same people who are like, if you're not going to save me 500 bucks, are the same people who are mad that things go up $20.
yeah. It's like, oh well, I really wish I could use your insurance, but this guy over here, his premium is $20 a year less. So I'm gonna go with him. I was like, that's like just over $1 a month difference, and good luck getting through their underwriting. So he was just saying like, oh, it's 500, and then immediately after he's like, they need to say be 500 more, or so I'm not going to refinance. The girl's like, yeah, plus the election's coming up. And I was like, oh my gosh, none of this matters. And so I have some interesting information that I would like to share. Now, I don't know how to really share my screen on this. So for now, I'm just going to read it off. But did you know? Because well, I'll get into the other guy in a minute. As far as his, 150 versus $500 a month and what's worth it and what's not worth it. Because he's got a point to an extent, but after a while, you're like, well, that is a lot of money, and you could save that and like cut your mortgage down by 10 plus years if you just used a little bit better strategy. But as far as the elections are concerned, if you had to guess, would you say that mortgage rates go up or down leading into presidential elections?
Leading into,
Yeah.
I would say they usually tick up
Okay.
and decline after.
Right. Well, I think that's what pretty much this lady was saying in the gym as well. And that's what everybody I talk to says, right? Because what do they say? Well, I'd really like to buy, or I really do want to refinance, but I'm going to wait until after the election. Why do they say that? Probably just what you said, right? They think the rates are going to go down after. But especially this case in this year, because the Fed decisions are like right on the path going up to these are highly anticipated Fed decisions going right up to the
Mhm.
election. We're starting to see rates get priced in already. So they are coming way down leading up to the election. And then after the election, you could see them check and start to find a new level by going back up. And so the actual stat is mortgage rates have decreased leading up to 8 of the last 11 presidential elections. So from July to November of recent election years, going all the way back to 1980, 8 out of the last 11 times rates have gotten better before the election. So waiting until the election when it could actually check or go back to where the same levels that it was prior, what happens is you're seeing rates actually adjust and get priced into the market, speculating prior to the election versus waiting, seeing the results, and then having it happen after. So if you take advantage prior to the election, you're going to end up getting a better deal. 8 out of the last 11 years going or elections going back to 1980.
Yeah. I mean, the election comment is, it cracks me up. I had a client today that said, well, hopefully after the election, things will get better for insurance. And I told him, I said, well, insurance is up to the states. So unless Texas suddenly flips to Democrat, nothing's going to change. Plus, when was the last time you heard the federal government or any politician during a major election mention insurance other than healthcare? But that's usually wrapped up in healthcare, not health insurance. So I was like, I told him, I don't care who you could vote for the corn stalk out in your front yard. It's not going to change the way insurance rates are going unless you start hearing people talk about total policy change and like overarching differences in how they handle my insurance industry. So when they try to
Yeah.
bring their politics into it, I'm like, hey, just so you know, like it's just going up. There's a lot of things.
Yeah. There, I mean, there's no way an election, especially a presidential election, right? I mean, presidential elections can absolutely affect our things in our daily lives, but it's the local elections that affect things in our daily lives. And so, and it's also the local weather and for insurance and everything else. So unless we stop getting hail in the spring in Texas, we're gonna have insurance problems.
Yeah, I posted something yesterday. It was $150 billion in severe weather losses last year. And I think like 20% of it was due to, or less than 20% was due to major catastrophic situations like hurricane or earthquake, which means the really bad storms aren't the ones causing all of the damage that you think of when you think of a national like news headline. It's the thunderstorms that roll through your neighborhood for 6 minutes. They're happening more and more frequently. And it's like all the information is given to you as to why things are going up, but nobody wants to acknowledge them. It's funny that you say that. They're like, what are the rates today? Nobody in that gym probably said, what are gas prices today? And that's the thing
What
that that's the thing they're gonna deal with this weekend is the gas prices, not the interest rate on the house that they're not buying.
what about hey, what how come no one sits around and says, hey, what rate did you get on that last credit card that you just opened?
Yeah.
And
It's a
so
very good point.
again, I mean, we've crossed 1.5 trillion or whatever it is in the United States debt. And I mean, people they say refinances have been applications have been ticking up lately, but most of those refinances that are going up are cash out refis because they got to go pay off their credit cards. And they're using their home as a vehicle to try to help their rest of their net worth, wealth, kind of thing that they've got working on, right? Their whole profile. And so the everyone is so focused on presidential elections, we don't ever talk about like I want to get some. I want to go to the bar later tonight and hear someone get fired up about a local election, and I want someone from each side going, no, this one, no, this one, and here's why. And I'm like, yeah, okay, now we're talking. Now everyone in the bar can be involved, and like, oh shoot, that actually would affect my life every day, like right now versus presidential stuff. There's certain, again, definitely things that someone could come in the office and boom, executive order, this matters now, this affects me now, but it's not locked in stone, right? I mean, these local elections are so important, and the local economics and all that kind of stuff, all the way up to the Fed, which is not even a part of politics, supposed to be non-political. That's the
Right.
kind of stuff that we got to talk about if we want to talk about numbers and affordability. The inflation situation right now is just out of control, and it's not getting any better by spending more money. And so, same argument when you're trying to qualify for a house or qualify for insurance, like you're worried about the wrong stuff. We got to look at your whole profile. Like the 7% interest rate or the 6% interest rate, or hey, call me because I've got stuff in the fives now. Interest rates, that's not going to be the issue of your affordability. It's your $1,000 a month car payments, and you've got two of them.
Right. Yeah. I mean, it's just it's a whole thing, right? I mean, so you mentioned inflation. I get these on my algorithm all the time, the YouTube shorts of like, hey, here's what groceries cost me 10 years ago. I'm going to go buy the exact same items. And they're going to be like, it increased by 360%. And I was like, well, that number is scary, but that's also over the course of 10 years. But I was having this discussion with my wife the other day. I was like, 10 years ago, they didn't have Trader Joe's. They didn't have Aldi. They didn't have all these discount. They didn't have, these wholesale suppliers. So yeah, prices have gone up, but also people haven't curbed what they spend on. It's like
Yeah.
You,
So, but that's why the markets, and being, it's really important to have a lender that really understands the full scale of the economy and what matters to you and what doesn't matter to you and your goals and your dreams right now. Because if I can hyper localize the information for you for your situation, vice versa, it's the same thing as focusing on the hyper local elections to help your situation versus listening to all the fluff up here that doesn't really matter and will never change. And so I ranted a little bit. I was getting to a point that I'll have to figure out later because I already forgot it. But whatever. I can't remember what I was gonna say. It was a good one though. It should have heard.
I mean, it's just about it's just spending habits, right? I mean, like I remember growing up, and you might remember
Oh,
this.
oh,
I'm not
oh, oh,
sure.
oh, oh. I remember spinning habits. So because the all of 2024 has been, are we in a recession? Are we not in a recession? Are we in inflation? What kind of inflation? Blah 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 blah. But all the economic reports have come out and like all year long it's been like buyer resiliency, consumer resiliency, spending resiliency. And so the everything hasn't really caught up to us now. It's going to be an interesting, whoever gets elected, it doesn't really matter because all the fallout from all the stuff that's been happening this year and like kicking the can down the road for everything we could possibly kick will catch up. And that's why we have so much credit card debt. Like they're saying, hey, consumer spending is still really strong, therefore we're not in a recession. Well, but all that spending is going on a credit card debt, and someone's going to have to answer for that. And because of that, the that's the kind of stuff that the Fed is looking at, whether or not they cut rates and whether or not we can get better mortgage rates. And so the whole picture, the total cost analysis, like the mortgage coach guys say, that's what's really important. We got to look at everything that you've got going on, and then we'll decide, is the rate really high or is it high for you because we've got some credit problems because we've got too much spending issues and different
Yeah,
things of that nature. And so there's a whole larger scale of a true advisor and a true professional that we got to look at for you to know how we really doing. Like, what's the real root cause here? And so, national elections, it's not the root cause.
no, I mean, and it's just overall financial literacy too. We talk about it a lot as being advisors, and there's only so much advice we can give. But I mean, I can cite specific conversations with clients who want to lower their auto cost, right? They want their premiums to go down. So we raise deductibles. But the next question I ask is, if you can't afford the $30 increase a month, if you get in a wreck tomorrow, but we decreased it by $30, are you going to be able to afford the $1,000 deductible now? You couldn't afford the $300 increase over the course of the year, but now we've just increased your out of pocket in an accident by $500. So what are we doing here? Like you said, kicking the can down the road. Are you going to be able to afford that, or a lender, right? Somebody outside of you, because we usually have these conversations very early on in the home buying process with clients. But if a lender is like, we just need this at a number, we have to have it here, we have to have it here, client ends up closing on the home. I've got their roof deductible at like 30 grand to get them qualified, to get their DTI, their ratios right. But they've just emptied all their cash on this purchase. If they get hit by a
Well,
hailstorm 2 weeks into the home,
that's
how are
bad.
you going to replace this thing? Because then, even if you don't get it replaced, the next year, the insurance company is going to say, hey, it's not insurable.
Yep. So there's a lot of things that you have to consider, and you have to plan a little bit better. I mean, there's more of a plan than just saying, "Hey, I can get you qualified for this loan, and we can close in 2 weeks."
Mm-hmm.
That's fine, but what happens in 3 weeks? Like you're saying, and so you got to have a bigger plan in place and look down the road. So exactly what you're saying is why sometimes I have a hard time talking to people about down payment assistance because down payment assistance is the number one most defaulted loan in the country, and it has been forever. And so, what happens when in DFW, your insurance and taxes go up, and we just barely got you pushed through and qualified for a down payment assistance loan? We're working on fixed income, and we can do it though. We can get you a closing, we can get that realtor a check, but we're going to push these people to the top of their budget and then taxes and insurance go up. And then all of a sudden they're getting caught behind on payments and they're spending on their credit card. And now we're getting caught on payments. So there's more to the situation than just being like, yes, I can close on that deal and I'll do it right now. And everybody will collect a check and we'll move on. Is that the right thing to
Right.
do? And so affordability is a huge conversation that we need to, we don't talk about budgets in school that much. I think I had one class in high school for where we like kind of buzzed over it in a day. And I think they tried to make me balance a checkbook that I've never actually done that in my whole life. So, and like
We
that
took the
was the
same
big,
class, personal finance.
yeah, that was the big thing was like making sure we know how to balance a checkbook. Not what are we using the checks on or like, shopping things correctly, but like, hey, you can balance that baby, right?
Yeah. And it's just, it's all,
So
I think it's all smoke and mirrors. It's like everybody wants to point to one thing being the problem, but there's six different like I can relate it to, back to our athletic days. Like, oh, my knee hurts. Well, it's probably because you rolled your ankle and you've been running weird. It's not really your knee, it's your ankle. Or, oh, my shoulder hurts. And it's like, oh, it's because you're throwing at a weird angle, or something hurts because something else is messed
yeah,
up. And then everybody wants to blame the interest rates, or blame one thing. And it's like, no, it's like you're stupid with money. And then you found somebody who is like, cool, let's get you
yeah.
to spend more of it.
If your shoulder hurts because you threw 200 pitches in 11 innings and you didn't run ice, hydrate or anything afterwards, and then you immediately started House and Budweiser's. Yeah, your shoulder hurts. Sorry, bud.
Yeah, kind of like, yeah, you can't buy a house. Maybe it's because it's the $1,800 in car payments you have out front, and two of them are co-signed.
Hmm. Yeah, I mean, then that's where it has to be a really tough conversation. I don't necessarily, some clients, we absolutely have these conversations. We're close enough to do so, but other people may not want to talk about it. But it's like, hey, let's talk about those cars. Do we really need them? Obviously, in a lot of cases, yeah, gotta have wheels. You gotta be able to get places where you want to go
Mm.
for work and everything else. But do we need that pair of wheels? Do we is there another option? Did you shop as hard for a car rate as you did or as you're doing right now for an insurance and a mortgage rate?
Yeah.
Car, I think somebody really interesting to have on as a guest one day would be someone that works in the auto industry. Tell us what you're really saying behind closed doors. And we should have called this thing behind closed doors, right? You want to see Oz? You want to
Yeah.
lift that curtain, and but that's really how it goes. So the affordability crisis is a big one. But I got going on that because of those people at the gym talking about it, and he's being kind of greedy in a sense, right? Saying, oh well, if I don't get the greatest deal ever that I can post on social media, saving $500 a month, I don't even want it. What if it's 300? That's kind of good too, you know? Um,
I've switched people's situations to save them money on their home expense, right? Their home insurance, their escrow. I have sent them to a new auto carrier that is more expensive than what they currently have. And it's about the whole number, right? So like your overall cost for insurance went down. I'm sorry that your monthly withdrawal is going to be more, but your overall cost is down. It's like, what do you want to look at? Do you want to look at the whole number, or do you want to look like at what's leaving your account to, Progressive Auto? So if I can save you
so
$1,000 and increase your auto by 200, we're still net positive $800.
let's do a fun little exercise here, okay? Because let's say we save somebody $300 a month on their mortgage, but I'm actually going to lower it. Let's say we save them $200 a month on their mortgage, because I'm seeing that quite a bit right now. So that in a year's time, that's $2,400. And most
Mm.
people that work in some kind of salary job, some kind of fixed income, they get raises of about $3,000 a year. So what would you say is the average to entry level salary in the Fort Worth area?
Like 45 grand.
I was going to go a little higher. I was going to say 60. So, but yes, well, a lot of the entry level jobs are probably still at 40. Like everything else in the world has been played here, but entry level is at 40. It's hard to
Mm.
get qualified for a loan at $15 an hour, at $20 an hour. It's hard to get qualified for that because most people will have a car loan and maybe a student loan, and all of a sudden our DTI is out of control. But let's say that we're at $60,000. Let's say this guy at the gym, he goes, okay, Jim, you pay $40 a month to go to the gym, whatever. He's probably not um, check to check. He might be, but let's say he makes $60,000 a year, and a good year is he gets his 3% raise. So what's 60,000 times 3% is 1,800. Well, that 250 that he just squawked at is more than the raise he's going to get in his job that he would be pumped about, right? Most people are pumped when they get a
Hmm.
raise, and it's usually only 3%. That's 1,800. What if we get the raise and the 2,400 a year in savings? Well, now we're saving him 350 bucks a month, you know. And so like we got to look at this a little bit differently. Everyone we have to frame the conversation differently to make sure people are understanding what we're saying. $250 a month is 20. Let's see. I have to use my calculator because my math isn't that great. It's $3,000. Okay, at 60,000, 3% raise is 1,800. So what do I do? 1,800 divided by 3,000 is 60% better savings on his mortgage than
Yeah.
his raise.
Yeah. And
So
what it does, what it also
what?
does in turn is it gives you room for maybe a tax increase, insurance increase. You just saved yourself 3 grand. You
Yeah,
know, what if your insurance
obviously,
went up $1,000? You've got that
as
money
everything
in your
else,
pocket.
yeah, as everything else is going up, especially right now in 12 months and 24 months time, 3% raise at your job is not enough to keep up. But if we double that and we're at like a 6% raise now, maybe we're starting to keep up with the inflation rates a little bit better. Maybe like you're saying, now there's a real buffer to help out with the insurance and taxes increases that we're seeing. And oh, by the way, did you protest your property taxes? You know, because obviously that's a
Yeah.
huge thing in Tarrant County. So we got to start looking at this in a lot different ways. And that's what I strive to do for my clients as a mortgage broker is like, hey, I'm not trying to sell you a transaction right now. I'm not going to force you into a loan that could be kind of rough in 24 months for you. So let's look at everything. And then if we can get you in there and being an owner versus renting, you know, and growing equity versus just giving it up, plus all these other budgetary things, now we're rocking and rolling.
Yeah.
Now I can earn my commission and not just take it.
Yeah. Or you could take your advice from people like what was that video I sent you yesterday? Grant Cardone,
Grant
guy,
Cardone.
the guy who owns millions and millions and millions of dollars of real estate and homes, and he's telling you it's smarter to rent right now so he can
Apartments.
buy more real estate. Yeah, it's smarter to
Yeah,
stay in an apartment.
he wants you to rent from him.
One of his 100,000 units that he owns, that he's going to increase the rent by 5% every year.
Yeah, it's an interesting
Ugh.
thing. They're on a much different level. That they would be uh he would not be a dream guest for our little chats here for me.
The thing is, I think we would ask him a stupid question, so dumb that he wouldn't know how to answer it, and then his curtain would fall, and we'd see that it's not Grant Cardone. It's a monkey turning a little thing, and it's got a puppet strings hanging from him. It's not a real person.
Yeah,
Doesn't know what he's doing.
it's basic. You just described Men in Black.
That's what I was trying to
Memory.
get. The face open, or like
Yeah.
the face on the guy opens, and it's a small alien inside, just telling people stupid stuff.
Yeah.
The world is
But
wild. I mean,
that's what I
good
wanted to go over
information.
today. Was just hearing people talk. Obviously I hear clients talk. We talk about a lot of things, and we want to strive to talk about more than just the obvious, because we want to set people up for success. If you have a financial advisor, you want them to talk to you about everything. You want to talk to about, hey, if you do this, here's the consequence, here's another way you could do it, another strategy you could take, and here's the consequence. And we want to go through all of it, and then we choose based on the information given. Well, I do that with mortgages, but we also have to talk about everything else. Credit reports are a real thing, and they're a part of your mortgage process. And what's on those credit reports? A lot of times it's the
Hmm.
spending that you've got going on in your daily lives. And when I hear people say $250 a month is not enough in savings, well, what are you going to do? Wait, and then what if the rates stop where they are now and they just hang here for another 18 months? Which is likely. It could happen that way, where they're not going to keep going all the way back down to twos, threes, and even fours. You could probably get into the fours eventually here if you pay a little bit buying points down or something. But if we're just going to stay put with rates in the fives and sixes going forward, um, and $250 a month is the best you could get in a refinance, are you going to take it or not? What does that mean for you? You can choose not to take it because of closing costs, because you just maybe pay extra to your principal every month, and lower your term that way. and not have to incur those closing costs. That's a totally acceptable strategy. That makes me no money that I'm happy to present to you. But listening to that guy talk, I was like, dang, I would like to hear what he does for work.
You should have jumped into the conversation. The old you would have done that.
No, I like to listen sometimes, not all the time.
Sometime, yeah. The one time. Yeah, you're frozen too.
All right, well, there you are. We're back. That's a good indicator to get GTFO.
Yep. Computer says stop. So stop.
It's Friday. It's time to go to shop.